This is an example of a profitable strategy. It was released at the beginning of 2019, so we're doing out of sample analysis for the past year. So this was developed beginning of 2019. What's it done the past year? And it's a strategy that most traders won't trade. Trading one contract is up $50,190, but most traders will not trade a strategy that only wins 22% of the time. It loses 78% of the time. So in 10 trades, you're only right 2.2 trades out of every 10 on average. Your drawdown is about $5,000, but in the past year, it's up. We've had more volatility, so it's been a better year than normal. But these price levels, I would anticipate that these daily dollar ranges exist. And so this is gap continuation 2019. It's in the portfolio. I have some updated easy language. You might see that it says gap continuation 2020. That's because the signal name is, we use the same easy language now as gap continuation 2020, but 2020 has a range filter. We're not using the range filter on this. We're just using the raw strategy that was developed at the beginning of 2019. And I'm going to show you some updates that you can do to this to make it better. If you want better stats, I can show you one. What we can do to increase the total net profit to over 70K. I'm going to show you another one that will increase the percentage of profitability by adding a profit target, and then again with max daily entries. So here are the 3 different things we're going to do and show you the results for. This is for gap continuation 2019, and we're going to show you how to change the stats. I get a lot of questions about this strategy. It gives back a lot of gains, and you see this report right here. Gap continuation 2020 got in a little bit later, and it was stopped out last Friday, and so huge gain right here was just pulled away. It was pulled away from us with the reversal in the market. Stimulus news hit the wire. And so the market rallied, and it was still profitable that day, plus 1185, but almost plus 2,000 at its equity peak. So should you add a profit target? These are all questions I want to answer now in this video about gap continuation 2019 and why we do what we do. And so let's take a look at this. I'm going to go in here. I'm going to format the strategy, and I'm going to change it. You see, it's gap continuation 2020 2.0. And to trade gap continuation 2019, range filter is false. To trade gap continuation 2020, we just added a range filter. So it's the same easy language to make it easier. So what we're going to do, the first thing we're going to do is we're going to look at a bigger stop loss to see what the results, the difference in the results and how those change the stats. So a $300 stop loss is pretty tight. When you increase that stop loss to 700 over the last year, your total net profit goes from 50,000 to 76,000. The drawdown goes from 48.75 to 47.15. So your drawdown is lowered if you increase that stop loss, which makes sense. We have a lot more volatility than we did when we first implemented this strategy at the beginning of 2019. So 594 average trade profit. Your percentage of winners goes from 22% to 40%. Still a good improvement. Profit factor from 2.02 to 2.42. Your equity curve looks like this. So nice strategy. I love this strategy. $700 is probably a more appropriate. But for now, if you like tight stop losses, you can get away with tighter stop losses. So what happens next, we're going to look at if you add a profit target. So we're going to add a $1,000 profit target and see how that works with a $700 stop loss. So we're going to format the strategy here. Format strategies, profit target, set it to true. Say OK and close. So here we go. We add the profit target, and you get much less profit, 32,000. The drawdown goes down a little bit. Your percentage profitability goes up to 52% though, and your average trade profit is 147, much lower. And so these results feel better. The equity curve feels a little better, but it's not the gains are not as good, and the return over drawdown, the net profit over drawdown is not nearly as good. So what else can we do? When you have this profit target, you can get in, hit your profit target, get in again, get in again, get in again. You can keep getting in. So we can set the max daily entries to 1. So format strategies, use max daily entries, true. Let's set it to 1. And then we'll see what the results are there. So this improves it a little bit more on the percentage of profitability, almost to 60%. The drawdown goes down just a little bit. The return over drawdown is still bigger with without the profit target, without the max daily entry. So you get 32,935, 36.25 drawdown, $259 average trade profit. Really nice looking equity curve though. So now let's do one more test of this, and I'll show you what I'm looking at. So what if we format strategy, and think of our original strategy. It had a $300 stop loss, no profit target. So what if we take the profit target away and keep the max daily entry? Let's see what that does, and then we can come to some conclusions there. So with max daily entries, we can limit our maximum daily risk to the stop loss plus slippage and commission. With the stop loss of 700, your drawdown is better than your original drawdown. Your original drawdown with a $300 stop loss and no max daily entries is $48.75. Your return over drawdown is $10.29. Your average trade profit is $257. Now you get $685. Your total net profit over the last year goes from $50,000 to $79,000. Your profit factor goes way up, and so this is a really nice approach. You actually get $50,000 on the short side and $29,000 on the long side. So these are some adjustments that could be made. Again, this is over the past year, and it's just changing the stop loss, changing the max daily entries to 1 from our original $300 stop loss to no max daily entries. And I kind of like this. I may change the portfolios based on this analysis, and so we'd have to go back and then test it historically. Once again, we've just tested over the past year, and that's what we've done for this video, is to look at what can we do over the past year to make this better in anticipation of these continued higher levels and higher volatility.